All right, good morning, traders. Welcome to Monday's edition of the Ninjacators Morning Bell with me, Richard K. Right, before we look at the live markets and the analysis part of today's session, let's quickly look at this week's economic calendar. A little bit later today, 9:45 a.m. EST, we have the flash services PMI. And then tomorrow, the CB consumer confidence figures. And on Wednesday, crude oil inventories as per usual. But I think the biggie for this week will be the advanced GDP quarter-on-quarter figures. That's at 8:30 a.m. on Thursday. Apart from the economic news events, we have Microsoft, Alphabet, also known as Google, Meta, formerly known as Facebook, Apple, and Amazon as well, all reporting their earnings during this week. So, yeah, quite jam-packed on the tech side there with the earnings scheduled for this week. So, potentially, hopefully, going to help this market bounce higher. When I say the market, the indices, I mean. With that being said, let's quickly have a look at the ES. As always, also going to look at the NQ, crude oil, gold, and the dollar index as well. And guys, as always, if you've got any questions about the analysis, want to know a bit more about the techniques that I employ here, which is market geometry, then please feel free to ask there in the chat box. I'll be more than happy to assist you guys with that. All right, so last week we started getting this bounce higher on the ES from sort of the middle area of a zone we identified previously. This was also the lower red warning line of a shift pitchfork that's been sloping downwards, and we've had on our charts for quite a while. Still think that if we do get a bounce higher here, the price will retrace a decent portion of this drop to the downside, the one that started on the 16th of August. And if that does happen, I still think that that is just going to be some sort of a corrective bounce, potentially even reaching the centimeter line of this green pitchfork again. Potentially, I say, we might even see just sideways movement and then another move to the downside. But whatever transpires next, I do not think that what I'm still assuming is a correction is not done yet, i.e. that price might even move lower towards the 3,324. I don't know where that label's gone, so I'll just drop it in again, or the lower side of that around 3,136 to complete what I'm still thinking could potentially be, like I said, a correction. But if we had to try to figure out what corrective move fits within all of this mess that we've seen to the downside, albeit very, very volatile, I still think that it is potentially a WXY correction where the Y wave is not done yet, meaning that we still need to see, in my opinion, could always be wrong, something like this. Now this could even take us into next year, maybe the first quarter of next year, and then potentially see the end of a corrective move. Now, although things look really bad, I always have to remind everyone to look at the bigger picture, and we'll soon see that the ES is not even corrected 50% of this massive move that we've seen that started in April, and was it March 2020. So even if this is a deeper correction, then one would think at least a 50% to be reached, as well as the 61.8%, which is sort of like just above that lower limit of the three support box that we have over there. Now we also look at obviously areas the price might retrace to in conjunction with market geometry lines, which is what all these different lines are here. We've got a bigger, longer term pitchforks, what I call it, using the three most prominent anchor points prior to this decline started in Jan. Had beautiful support in June. The price eventually broke it and moved lower. Now, if we had to combine the pattern work that I also like to do, or trying to identify what corrective structure you might be dealing with, assuming that it is, then I did say that I'm expecting some sort of a bounce and then at a later stage another move to the downside. Now we did get that bounce, like we probably all know, from a zone we identified previously. Then it was on Friday that price pulled back to a little support zone that we've had at 3,707 on the upside to the bottom side 3,675 that I said needs to hold to basically see if we can get another move to the upside that could be sort of like equal to this first move to the upside that we had here, since price bounced from that lower red warning line. I think at Friday when we started the session, price was actually trading below the support area, and I did mention, let's go to a 4-hour chart, or before we actually do that, that it does look like we had a 3-wave move, and it's now price is getting ready to move lower again. And the only other pattern that would suggest that if price were to go high was either a double zigzag to the upside or the start of a leading diagonal. So because price did close above on the daily, above the support zone, our next target area was around 3,815.5 plus minus, which just falls in line with this low median line. This green one is sliding to the downside here. And you can see previously how we had situations where price pulls into it, gets rejected, eventually breaks above it, pulls back, finds support, and moves onward. So the next overhead resistance for the ES needs to be clear if price were to move higher, in my opinion, 3,815. So I think on the daily candles today, we made a high already at 3,813.25. So could potentially still move a bit higher, but also with market geometry, I mean, that's very close to actually hitting that line. So just be wary of that line, and like I said, potentially if we do see a break above there with a close, it could then act as support like it has here, for example. So price breaks it, pulls back towards it, and we get a rejection back to the upside again, then we'll have to update our targets to the upside, which in the next scenario would lie at this dash median line, and the one above that, which will, like I said, have to update on a daily basis, would be at this median line over here, around about 4,000. That's quite high up, but like I said, the expectations was that we will see at some stage a bounce to the upside, potentially from this area, because price then reached the lower red warning line for the second time. That has happened, although Friday, I must say, I thought it wasn't going to look good, but price managed to reverse and close nice strong to the upside. So again, 3,815 is a potential area for resistance. I would like to see that overcome with these two targets back to the upside again. But let's quickly look at price structure on the smaller time frame, like the 4-hour. Let's give that a little minute to load. And you'll see since price bounced higher, it does look like a nice clear 1, 2, 3 wave. Now that's 3 waves are, in Elliott wave terms, if you're dealing with corrections, are called zigzags. They're the most common ones that you can get, and then price reverses, moves lower. I'm still viewing this bounce as corrective. So the next thing to do would try to figure out, since price now actually made 5 waves instead, 1, 2, 3, 4, and this recent high 5, that this suggests that high prices are possible. And the only way that this could be the start of a much higher sort of corrective bounce if we start seeing a leading diagonal taking shape. Now leading diagonals generally run sort of like parallel to each other, something like that. And you'll have 5 waves that kicks off a move, then a corrective move, and then you get a much higher move at a later stage. Now obviously we'll still have to wait and see if price can overcome 3,815, but I still want to side with it. If you think you're dealing with an ABC and it fails then to move to new lows, that the secondary go-to corrective pattern that I go for is a WXY wave or a double zigzag. So you have a 1, a 2, a 3. Let me just copy and paste that. Followed by another A, B, C. Conjoined by, or joined by, should I say, what we call a WX axis, and the entire thing would be called, let me just label that for you guys, ABC for a W. Corrective structure, also an ABC here for an X wave. And then you have a final Y wave to move higher to complete the structure. And then you get a move downwards. So basically just two ABCs. They don't have to be similar in length. I just copy and paste it to kind of show you what it is I'm looking at. Your first wave of your A, of your secondary ABC might be shorter, but I think hopefully that is sort of a bit clearer of what I mean by WXY wave. All right, so that is, in my opinion, a possibility. If price should go higher, and I think the first sort of thing that this is a possibility, or sign that this is a possibility, should I say, is that price has now made 5 moves. And on a bigger picture, still thinking this is corrective. So what fits that sort of structure? A WXY wave or a leading diagonal? Right, so I think, my opinion, still forecasting higher prices. Perhaps the good earnings would, or maybe even these days, things need to be bad on the earnings side, start showing that the economy is struggling. And if that does start pitching up a bit more often than not, then the Fed might not decide to raise interest rates too high the next time. I think they're doing the next decision in early November some stage, which is just around the corner. But in any case, in the nearer sort of term, I think we're heading higher still, but just keep in mind 3,815 and a half-ish plus minus needs to be broken to the upside, potentially have a close on a daily for me to start thinking that this is a possibility. But we do have 5 waves at the moment. So either a leading diagonal, or we have a B, C still to come for a secondary ABC to complete the WXY pattern. Right, guys, hopefully this makes sense. Again, if there's any questions about the analysis, then please feel free to ask. Be more than happy to assist you guys with that. Okay, let's go back to the daily and have a look at the NQ. Right, let's give that a few seconds to load. There we go. All right, so on the NQ, last week we were saying the 10,942 to 10,764 sort of zone needs to hold, and then we could potentially see a bounce from that. These lines we drew in last week already, and we did get a nice little bounce. Price just tagged the upper limit of that support zone, moved higher, and then our next resistance zone is on the lower side at 11,514. Towards the upper side, 11,662. And how we got that zone was basically just encompassing this lower median line, this green one sloping downwards, which is similar to what we've done on the ES by using a shift pitchfork that's been tracking this entire move to the downside. Actually zoomed a little bit too much in there, but anyways. So that zone held, we had a move to the upside, and similar to the ES, the NQ's now been testing or just reached this downward sloping green median line here. And that's another zone on the NQ that I would like to see price break above, and if it does, then we have upside resistance. 11,822, and up from that it's a little bit more busier. You can see overrated resistance on the NQ than the ES. Way more market geometry lines up here, but still pretty decent targets or areas that price might move towards. This one being at 12,126. All right, so that's what I'm seeing on the NQ, very similar to the ES. Also hit a market geometry line. So price would need to really get a nice push, and on both the ES and the NQ, close above, potentially on the daily, above those areas. And then you can say, yeah, we'll probably see a move to these upside levels that I just noted for you guys over there. Okay. Then crude oil, on the other hand, also last week, bounced higher after price reached the lower end or the lower line of a channel. This is blue one that I'm sloping to the downward side here. We had a little zone between 81.69 on the lower end and 82.50 on the higher end, and price reversed higher. And there was not too much space towards our first resistance line, which was at 86.05. Price overshot that but closed below it, and it's looking like it's not looking, it is definitely obviously still moving lower. But if this low were to hold, then I'll assume that this was a corrective move. I'm still thinking that crude oil can head higher and go test these highs that were set on the 10th of October. And this after a 5-wave sequence moved into an area we identified beforehand. At that stage, we were assuming that all of this entire mess from this high that, or lower high it was on the 14th of June, was some sort of a leading diagonal or an ending diagonal. And I still lean towards that. I'm thinking that this is a leading diagonal that moved into this area where we had a confluence between a market geometry line sloping upwards and a lower green median line, which is this line running over here. There where they all crossed is where we've seen a nice bounce to the upside after a 5-wave sequence, meaning that I'm expecting a decent retracement of this drop to the downside. Price only pulled back into 38.2. Another good example of where price found resistance again at a median line, this dashed blue line that you're seeing over here. Again, if you're new to these sessions, these lines weren't drawn after the fact. They've actually been on my chart for the majority of this year, and they still act as support and resistance really, really well. Okay. Again, now here we've got to figure out if we're dealing with some sort of a pattern after a 5-wave corrective move. We'll assume that we're going to have to get a much higher correction. And in this case, if we had to just, let's say, use a trend line, adjust that to this first bounce where that high occurred, and assume that this is a corrective move. Again, I'm only going to say that that corrective move was potentially over if price can break over the 86.05. Then we could get a partner leg to the upside that could potentially extend further or travel the same distance as this first move that we had to the upside. Again, assuming that we might be seeing one of the most common corrective waves, potentially just an A, a B, and a C. So look out for the 86.05. We need a close above here on the daily. Then I would say, yep, let me just remove that one. We could potentially see a challenge of these highs and potentially even reaching the center median line again, or even move higher. All right, so sort of like just hovering a little bit sideways. Quite a large range there on crude oil. We also have a question here from Mr. Jenkins. Yeah, volume is extremely low. I think everything's sort of just waiting for these GDP figures this week, as well as these earnings reports from these tech giants. So, and it's Monday, so we'll have to see if more volume creeps in during today's sessions or by the end of the day, and see if this week can hopefully clear these lines to the upside. Obviously, we don't want crude to go much higher again, but it is what it is. It's what I'm seeing on the charts. Obviously, I do want the indices to start showing some more bullish strength. But yeah, again, that's just my forecasts, and as far they've been pretty decent. But again, what this session's pretty much all about is to just give you a bigger overview of where I'm seeing the markets in the bigger picture, and as well as over the near term, see where we might see support and resistance creep in. So just to round things off on crude oil, we had a 5-wave sequence into an area that we identified beforehand, a strong bounce to the upside, and expecting that this is a corrective wave. Now we might even move lower again, maybe even test this lower median line again, and then see a move to the upside. But there is, in my opinion, I think a good chance that after this sequence to the upside, that we could potentially see another move back up again. All right, and then at a later stage, if this all turns out and we start seeing evidence of price moving strongly to the downside, then we could say probably good expectation that price would then test and break these lows that was set towards the end of last month, September. All right, let's move on to gold and then the dollar index. Cool. So an overall picture in gold, I'm still viewing all of this mess as corrective in nature. I think that we still have more downside to see in gold, and the pattern that fits here for me in the overall picture is what we call an expanded flat. 3-wave, 3-wave, and then 5 waves to the downside before it ends, and then see a strong move back to the upside again. So good luck trying to figure out how to count 3 waves here. I'm thinking this is a complex 3-wave correction. We have a complex correction here in A, B, C, where the B wave was actually a triangle to get the C wave, which failed to break above the start of where this entire mess started. And this is typical behavior of an expanding flat, and then what you'll do is expect that you might see a 5-wave move down to the downside again. Now here I've got my pitchfork colored as white. I should actually change those colors so we can clearly see what's going on here. I'll do that for the next session. But we had price hitting this lower median line. We had a bounce up. At that stage we had a beautiful 1, 2, 3, 4, 5, thinking that this entire pattern might have completed. Although at that stage I did note that it's a bit shallow for a C wave of an expanded flat. We had a move back up, basically just had an area of market geometry at this red zone, and we were saying that we might see resistance there. We had a beautiful rejection from that, and the problem is that all of a sudden a beautiful 1, 2, 3, 4, 5 turned into a 1, 2, 3, 4, 5, 6, 7, 8, and now potentially busy with the 9 wave. Now the only thing that can fit to make me think that this is still a C wave and a 5-wave sequence is that we in fact been seeing, and I'm not going to even use that Elliott wave labeling thing, I'm still working on my own tool, is that this was a 1, a 2, a short 3, which is not uncommon for commodities, a 4, and that the 5th wave is tracing out as an ending diagonal, which either ended last week on Friday or still needs to end, I think. And we have this potential support zone on the higher end around 1,615 and the lower end 1,587. We might have to update this if price moves lower again. But if this is the 5th wave of an ending diagonal to make that final 5th wave of the C wave, hopefully you understand what I mean by that, then you're potentially going to see some sort of 3-wave movement here, which could take a while to materialize. Price might even extend a little bit lower than this lower channel line over here of this potential ending diagonal. It's also not uncommon, and then you see a reversal. So I don't think we're done going lower yet on gold. If price were to move higher, then potential resistance again at this lower median line, which is that white one. Again, I'll have to change that color above today's price, around 1,689, give or take. And then we also have this downward sloping median line, which is the upper end of my proposed ending diagonal, which resides at 1,700, 1,704-ish. And as days goes by, price doesn't reach these areas, we'll have to obviously update them lower, okay, as time progresses. But still think there's a decent chance that price will move lower again, but like I said, potentially in that final wave to the downside of a fifth wave, potentially seeing something like this, which could also take us into the end of the year, maybe even into the first quarter of next year. Okay, so there we have that, and lastly, the dollar index. Obviously, for you folks who want to trade currencies, anything cross-related or paired with a dollar, obviously keeping a close eye on the dollar index as well. If you want to be trading gold, so a very strong dollar generally lets the gold move lower. So here I have two different types of market geometry, drawing tools or lines, if you want to call it, a channel as well as a standard pitchfork. Sloping to the upside, we have now for a while before price reached the 114 to 115, almost 115 sort of zone. We had this resistance area here, which basically is just the upper end of this channel line, this blue line, and also the upper median line of the standard pitchfork sloping to the upside. Now price did move into there. We had a strong rejection to the downside, and price has now moved up again. We've sort of been seeing support, and this is on a weekly now. I don't have live data for the dollar index. So every day that I basically load NinjaTrader, it updates the weekly data of where price is within that current week, if that makes sense. So we had a rejection, and the question still is, are we going to see another test? Where's this? Of this line, maybe a break of that, or will price actually then finally reach this upper median line, and then we see a deep retracement. So very interesting to see that we, in obviously both in gold with the pattern we're seeing there, price being very close to a major support area in my opinion, as well as the dollar index also being very close, already reached a very strong area of resistance, taking from a weekly time frame. And I mean, this market geometry was drawn back, going all the way back to, where did I start this from? I think it was from around 2011. Right, so yeah, we'll need to see, or the dollar index will need to hold this area, and then I think we got a good decent chance of price move higher, and then we see a deeper correction. Alternatively, if we see a strong move lower this week that breaks below the low of that start of October, which was around about, let me just quickly see, $109.96, around about there. And I think we got a good chance that price could pull back into the center median line as well as one of these blue median lines, which is the middle of that, still lies around about 106/96. So it's all about now really trying to figure out where the dollar index is going. But in any case, it did reject from a resistance area. It's now just a question of, are we going to see another high and then a rejection? But if price does start moving more lower, aggressively lower, then I think we'll have an interim high potentially for this year in place, with a correction or a deeper correction towards 106-ish sort of level to follow, if that makes sense. All right, guys, so that really concludes today's analysis. I'll have to see how the rest of this week goes. Obviously Wednesday I'll be back, and then on Friday again. Hopefully we could start seeing some more bullish moves to the upside on the ES and the NQ, but like I mentioned, price needs to break above those resistance levels and those zones that I've shown you, and still think that gold could move lower. Whether it's going to happen now or next week, that I can't tell you, But these are all the levels that I've mentioned to keep a good eye on. If you did not manage to catch those levels and you want to duplicate them on your charts, then please feel free to go visit our YouTube channel. The recordings are available generally like 10-15 minutes after the actual sessions. I do put timestamps in the description as well, so that you can just fast forward to those chapters and then also maybe go replicate those support and resistance lines. Maybe if you're a bit more advanced and you know how to perform market geometry, you could also try to draw in these pitchforks if that is something you would like to do. All right, how are we doing for time? Cool. Right, guys, any questions? Let me know. If not, then we'll call it for today, and I'll be back on Wednesday again. All right, all cool. All right, guys, thanks very much for watching. As always, have a fantastic rest of your day, and I'll check you guys again on Wednesday. All the best, take care, and goodbye.